Good afternoon, everybody. Welcome to Liberty Call. Today is Wednesday, July 19th, 2023. Hope everybody's having a fantastical day out there in the interwebs. Had a pretty good time at the game last night. Unfortunately, the good guys did not win. They lost 4-3 to the Rockies, who are not very good this year. They're in, last place in the NL West. And I think they're, more than 10 games under 500. So they're not having a good season, but the Astros went up 3 in the top of the first. The Rockies came back and hit 2 home runs and scored 3 scored 3 in the bottom of the first. And then they scored another run along the way. And our last best chance would have been if Gary had sent Jose Abreu when he was rounding third, but he held him up thinking that the next batter would knock him in. Didn't happen. So anyways, let me share with you some of the photos from my fun-filled time at the ballpark. Here we go. Here's Dusty and Bud Black handing out the scorecards. First pitch. That's Dubon up at the plate. There's Bregman, Tucker, Chazzy, Yanier, Corey Julks, and Pena. He has not been playing very well. And there's Hunter getting ready to throw out the first pitch. So anyways, had a good time at the game. Unfortunately, like I said, we did not win. I always prefer to be at a winning game, but did have good seats. I mean, we were 7th row, which was like 3 rows up from like the the fancy seats down right in the front. I think there's like 4 or 5 rows of those. So anyways, all right, you didn't come here to hear me ramble about the baseball game. You came here to hear about what's going on in the financial world. So, all right, let's get into the numbers for today. The Dow Jones was up 0.31%, 109 points, closed at 35,061. S&P 500 was up 0.22%, closed at 45,65. NASDAQ was in the red. I guess it was about noon my time, Mountain Time. It was in the red by about 0.25%. But NASDAQ finished up 0.03%, closed at 14,358. And if you wonder why I keep looking over, the Astros are playing right now. They're playing a day game in Colorado. Did not want to go sit in the sun after sitting all last night. My back is killing me. All right, the VIX was up 3.46% today. It's at 1376. Canada was up 0.56%, Brazil down 0.28%, and Mexico down 0.63%. Let's see. Germany was down 0.1%. UK was up 1.8%. France was up 0.11%. Netherlands up 0.07%. Spain down 0.04%. Italy up 0.02%. Switzerland up 0.15%, and Portugal up 0.95%. Russian exchanges both in the red today. The MOEX down 0.38%, RTSI down 0.96%, and the overnights, starting out with the Nikkei in Japan, it was up 1.24%, Australia up 0.55%, New Zealand up 0.31%. In China, the Shanghai was fairly flat at up 0.03%, Shenzhen Component down 0.37%, China A50 down 0.13%, DJ Shanghai up 0.02%, Hang Seng down 1/3, and Taiwan weighted down 1.26%. So little bit more rockiness in the overnights and than we had here domestically. All right, let's go ahead and hop over to the market recap for today. The S&P 500 climbs as earnings season heats up ahead of Netflix Tesla earnings. All right, the S&P 500 continued its climb on Wednesday as investors digested the latest round of quarterly results. During the ongoing earnings season, Netflix and Tesla were scheduled to report their earnings after the market close, adding to the anticipation. Goldman Sachs reported second quarter earnings that fell short of Wall Street estimates, mainly due to weaknesses in its consumer and investment banking divisions. However, the stock still rose more than 2% as CEO David Solomon expressed optimism about signs of improvement in the investment banking business, fueled by increased deal activity. Western Alliance Bank Corp saw its stock rise over 1% despite reporting mixed quarterly results. The stability in deposits and strong growth of $3.5 billion during the quarter eased concerns about potential outflows from regional banks, particularly after last summer's mini banking crisis. The technology sector remained subdued, trading slightly below the flat line as investors paused their bullish bets ahead of Tesla and Netflix's earnings announcements. Market focus for Tesla's results was expected to be on revenue of $25 billion and earnings per share of 81 cents per share. with particular attention on auto gross margin, excluding credits, to assess the impact of price cuts on future margins. For Netflix, investors were likely to closely monitor subscriber numbers for the quarter and guidance following the company's crackdown on password sharing. Carvana made headlines by announcing a debt reduction deal with bondholders that would decrease its debt by over $1.2 billion. This news propelled the used car retailer shares more than 40%, delivering another blow to short sellers who had bet against the stock. Carvana remains one of the most heavily shorted stocks on Wall Street, with around 50% of its shares being shorted. Overall, the earnings season remained a focal point for investors, with both positive surprises and mixed results impacting stock movements. All right. So kind of a meh day today. Little housing data up next. U.S. single-family housing, single-family starts drop. Building permits hit a 12-month high. U.S. single-family home building declined in June, retracing some of the large increase seen in May. However, permits for future construction rose to a 12-month high, indicating continued support for new construction due to the shortage of previously owned homes on the market. The decline in housing starts can be attributed to shortages of materials and higher borrowing costs, which are hindering builders' efforts to ramp up construction. Housing completions also fell, and the stock of single-family housing homes under construction reached its lowest level in 2 years. Despite the decline in housing starts, the level remains robust, and economists believe that ongoing strength is likely due to an upward trend in permits. If the economy continues to expand, annualized housing starts could reach 1 million units, driven by the ongoing shortage of existing homes for sale. In June, single-family home building fell in the Northeast, Midwest, and South, but increased in the West. Single-family housing supply remains well below pre-pandemic levels, which should support construction in the segment. On the other hand, the strong growth in multifamily housing segment, driven by rental demand, appears to be fizzling out. Apartment vacancy rates are rising, and the stock of multifamily housing under construction is at a record high, potentially discouraging new construction. Overall housing starts, including both single and multifamily, dropped 8% in June. However, the housing market is believed to have reached a bottom after being impacted by the Federal Reserve's tightening monetary policy. The National Association of Home Builders / Wells Fargo Housing Market Index also reached a 13-month high in July. While the housing market is stabilizing, the anticipated rebound could be limited due to rising mortgage rates. Residential investment has contracted for 8 consecutive quarters, the longest streak since the Great Recession. Permits for future construction on single-family homes increased in June to the highest level since June of 22. However, permits for multifamily housing projects declined. Overall building permits also dropped, and the number of houses approved for construction but not yet started decreased. The single-family home building backlog increased, but the inventory of single-family housing under construction reached its lowest level in a year. The stock of multifamily housing under construction, however, rose to the highest level on record. The housing market's performance indicates stabilization, and is expected that the drag from residential investment will gradually dissipate. The issuance of permits for single-family homes remains strong, while multifamily starts are expected to slow down due to weaker rental demand and tighter lending standards. All right, so looks like housing is still doing okay. It's not great. Could prices fall? Sure. Could they continue to go up? Absolutely. As far as real estate, residential real estate, I think, is still going to remain fairly strong. We may see some pullbacks in certain areas of the country depending upon demand, but commercial real estate is a mess right now. Ever since the whole COVID thing, it has just put a huge damper on the commercial market. You just have to drive around your local strip centers and you see a lot more vacancies, and especially in the high-rise buildings that are typically used for offices for companies like myself. I personally haven't been. I have an office. I just get mail there. But why do I need to drive 30 minutes into town just to sit in an office for 8 or 10 hours a day when I can do it right here? Anyways, all right. Last up on the horizon comes from Zero Hedge. It's titled "The SPR, the Strategic Petroleum Reserve, Could Stay Half Empty Forever." This is written by Julianne Geiger via oilprice.com. All right, here's my summary of that. The U.S. Strategic Petroleum Reserve, or SPR, is currently at multi-decade lows, and the task of replenishing the reserves is expected to be challenging. While the SPR is not empty, the amount of crude oil in the emergency stockpiles is the lowest it's been since 1983. It could take decades to fully restore the reserves to their previous levels. The difficulties in refilling the SPR with such a large quantity of crude oil have raised concerns with it, within and outside the oil industry. Oil prices are still relatively high, making it uncertain when they will reach the level that triggers purchasing action. Additionally, purchasing nearly 300 million barrels of oil could cost billions of dollars, which poses a financial challenge for the Biden administration. And over here, you can see the, let me make this bigger. You can see the SPR going back to the early 80s. This is where we're at right now, which is about 1983. And, it had been, I think it peaked out probably around the last time we had the financial crash, probably because it was cheap. They were able to top it off at very little. But anyway, so that's where we are right now. I mean, again, we went from what, 0.7, and now we're down at about 0.34. So it's about half full. So, all right, let's go back there. Where was I? All right, infrastructure and feasibility issues also come into play. The salt caverns that house the SPR were designed to last 25 years and to be withdrawn and refilled only 5 times. Any repurchase program would need to be slow rolled to prevent price spikes. Former officials have also noted that the caverns were not intended for frequent operations. On the question of whether the U.S. needs the SPR, some argue that the country may not require it to the same extent as when it was first established. The U.S. has become a net exporter of petroleum products and has significantly increased its oil production. However, the U.S. still imports millions of barrels of crude daily, and global supply shocks can put the country in a difficult position. There are also doubts about the Biden administration's commitment to replenish the SPR. While contracts were awarded for the acquisition of U.S.-produced crude, the rate of replenishment is relatively slow. At the current pace, it would take several decades to restore the reserves to their previous levels. Overall, it is likely that the SPR will remain at low levels for a long time, if not indefinitely. The United States relies on the reserves less than it did in the past, and there are limitations to the capacity of the salt caverns. Considering these factors, the prospect of fully replenishing the SPR seems challenging, and it is uncertain if it is a priority for the current administration. And the reason I bring this up is that right now, while energy prices have been receding, gas prices have been going down. The price of a barrel of oil has been down around 70, 75 for WTI. It's certainly not as good as it was 4 years ago or 5 years ago. But I'd certainly like to see the price of a barrel of oil, personally, 40, 50 bucks. I think that would help a lot as far as energy prices. Granted, I'm not the one who pumps it out of the ground, so I don't know about the what the costs are there. Whether or not and that's why I thought this article was timely. I've talked about oil prices are continuing to recede, but if we're going to be buying up 300 million barrels of oil over a short period of time, I mean that's, we use up 20 million a day here in the United States, so that's what. Adding wow. I mean, that's just a lot of extra capacity that we would have to cover. Ooh, got him. Somebody tried to steal a Maldonado and got busted. Anyways, all right, lost my train of thought. All right, well, that is everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Oh, and I forgot to start at the beginning. If it's your first time watching Liberty Call, you're probably not watching anymore. I don't see any people on the viewing. But give me some thumbs up, like, share, subscribes, follows, all that good stuff. I would greatly appreciate it. And like I said, I think that's everything I had for today. Hope you have a good evening. Let's hope the Astros win today. It would stink to get swept by the lowly Rockies. Anyways, hope you have a good evening, and I'll talk to you next time. Adios.